record the video. Again, like I said, if just like I said, the past 2 weeks, if I was like really listening to myself and not trying to have some of my personal issues deal with me, I could have been in a swing short. That would have been massive, massive money for me because I shorted a lot of those stuff at the top before they moved down. I gave them to you guys on time over and over again. I could have been in massive, massive profit, but I probably came out some of the short too early and I didn't take out some. But yeah, this is that season where you make some of the biggest monies in your life. In this the season where you lost some of the biggest monies in your life, especially people that you're in there, you don't know when you fail and you don't know when to get out, you don't know when to stop. Those are some of those seasons where people get wrecked. Uh, okay, I think it's been 10 minutes already. Came a little bit late, almost forgot that we have a class today. Still had a hangover from last night. All right, let's let's do this today. Let's try to do a small revision of what we've been doing. I don't know if you guys that's what you call it, revision. I know some of you here already know some basics, some of you here already have some clue, but hey, it's ton of people here that have zero idea what we are doing, and I like us to go at the same pace. I like us for everybody to be understanding some stuff that we've done so that we don't go too much and some people get lost. So this class today, we will revise a little bit on what we've covered, some of the most important stuff, and then we will actually show you guys I will tell you guys different type of traders and different type of trading style or different type of trader as you say and their advantages and disadvantages, and when likely to switch when likely to choose to be a particular trading style or to be a particular type of trader at a moment. So we'll show you guys all that. So let's get into some small revision. Let's see for at least it's 21 of you here. I think if somebody can just up on and give us a small clarity between a bullish and a bearish candle, what like I told you guys from the last class, let somebody just come up and try to give us a differentiation between a bullish and a bearish candles. Those key important those key important identifications so that we can get this moving, so that we'll get to understand that a lot of people are actually following up and not being left behind. So if you think you can do that for us and to clarify some other people as well, raise your hand up and we'll get you unmuted so that you can come up and tell us a little bit what you think about this system. Yes, Clovis, is there anybody else? All right, Clovis, unmute yourself and just give us a small touch on what so far you've seen as the difference between a bullish and a bearish candle.
All right. So far, what I've learned about these candles is there are two kind of candles. There is bullish and bearish, obviously, as Prof. Fozao is saying. So to me, and what I've noticed is a bullish candle. Can you guys still hear me?
Yes, sir.
All right. So a bullish candle is a candle that opens and closes above the point of opening. That's the most basic idea, like how to see it. While
Run that one more time.
a bullish candle will be a candle that open at a specific point and closes at a point above where it opened. So during the course of that candle, the buyers push the market to go up or to go bullish.
All right.
While While a bearish candle, as you are seeing on the drawing, there is candles, but obviously there's no colors to differentiate. A bearish candle in this case will be a candle that closed below the opening point. And yeah, I think that would be it.
Okay, yeah. Clovis, that was quite interesting. Sounds like you definitely know what you've been learning. And yes, just again, like we say, let's try to give everybody a fair chance. Let's give somebody another understanding to see what Joseph have to say. We'll probably do a few questions, so just keep your hands up. It's a little bit of what we can touch base on before we go on. Joseph, please unmute yourself and let's get what you've been getting out of these classes.
Good evening and to everyone in class. Yeah, the bearish candle and the bullish candle, they are there to signify what specific time the market is acting or what time the buyers are leading in the market. For instance, you have the bearish candle. It shows that the buyers are suppressing the 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 market. And the bearish candle is always signified, it's always colored in red. It's always in red. While the bullish candle is always in a blue color, showing that the market is going up. And their differences is always in 1 hour's time after the other market.
Okay, that was good, Joseph. Seems like you're not far from the truth. I love the fact that we are doing some of this stuff because you get to see where and see that we are moving in one speed. And I love this. I think we should do this more often so that we don't get a lot of people lost on the way. Please, just one more before we go to our next question. Joseph, Flavin, unmute yourself. Let's hear your own thought on what you think about these differences.
Okay, good evening, Prof. Good evening, everyone.
Good evening, Flavin, Mr. Flavin.
Yeah. The candles, first of all, they represent the activities that are going on in the market, and the bullish represent the buyers or the buying activity, while the bearish represent the sellers. So for the bullish candle, it opens at the bottom and closes at the top, while the bearish candle opens at the top and closes at the bottom.
Okay, that is good, Flavin. That is good. And
One thing again, the colors are represented for the bullish candle is mostly represented by I think by green color, while the bearish is represented how we can identify the different candles.
okay, yeah, that is good. That was totally good from the three of you. I love the fact that you guys are participating like this. I love this. It's interactive. Again, like I said, we learn by contributing, asking questions, doing some stuff like this. Somebody seeing you like you're coming up here, just wasting your time. Don't even care because again, I tell every one of you the work that you're putting right now, the participation that you're putting right now, the key listening and you trying to participate and try to learn the basic is definitely going to contribute a lot in you. Before I even give you an overall view of this, let me give you guys a quick example. When I started trading, when I jumped into this, I never had something like this. There's somebody that I have like my mentor didn't wanted to teach me something like this. All he does was trying to tell me to buy here, sell here, do this. And he never gave me that vision. Like I told most of you, the first time I bought Bitcoin was around $3,000 per Bitcoin. Him as a mentor never told me about anything like this thing is going to go up or nothing like that. The only thing he told me was for me to sell my Bitcoin to him. That is what he was telling me. And I'm glad you guys are in a place where you can sit up and we have some of this conversation, and you actually get some detailed questions and get some answers if I can answer them. If I cannot answer them, we all learn together. But yeah, let's go straight into this, just a small activity here. Yes, bearish candles definitely represent that prices are falling. Bearish candles open at the top and it closes at the bottom. And again, like we say, every individual candle has a head, tail, body, and it has an open and a close. So the only difference between a bearish and a bullish candle is because a bearish open at the top, close at the bottom, a bullish open at the bottom, close at the top, and a bullish candle signifies that there are more buyers than sellers, so you're expecting price to rise, right? While bearishness signifies more sellers than buyers, so expecting prices to go down. That is why it opened at the top and then ended up closing at the bottom, because people suppress it and the price end up ending at the bottom. So this will happen also in ranges, because we just talked about single candlestick pattern. Probably in our next class, we'll talk about multiple candlestick patterns. That's a whole big class on its own, or ranges. But these ones are just the beginnings. But okay, secondly, you want to buy or sell the market when you see a bearish candle, and you want to sell the market when you see a bearish candle, and you want to buy the market when you see a bullish candle. But remember, I told you guys the probability that I told you guys the formation of the next candle likely depends on the closure of the previous candle. This doesn't mean this is going to happen all the time, but there is high probability that the next candle to happen is going to be like how the other one ended. So in most cases, if you have a bearish candle, that means it closed here. There is a high probability that this one happening down here, that this one ended up being another bearish one. But some cases, you also have something like this, which we'll tell you guys soon, which becomes, you call it an engulfing candle, meaning this was a bearish and now you have a bullish engulfing candle, because the body of this is totally at least twice bigger than this. Anyways, we'll talk about that when we get to that class. Yes, that was just a small quick overview of this. Coming to our next question, and I would like some other people, apart from the people that have already contributed, to give us these small differences. The difference between support and resistance in a zone, in a price, and yes, just what you know about support and resistance in a price or in a candle or in an area, what you've learned so far. Let's see. Somebody have their hands up. Please, you send your hands up so we can see who is up. Yes, Ransom, admit yourself, and let's see if we can identify
Good evening.
of this stuff. Good evening, Ransom.
I was trying to ask you a question when you were still explaining. It was about you talking about buying Bitcoin when it was at 3,000. I was trying to ask to know if what are the things you consider before buying these coins? Like, how do you analyze them before knowing that maybe if you buy it now, in the nearest 2 years, it's going to escalate? Because in 2 years, it might still be the same. So I don't know how you look at them before buying them.
Well, given a lot of factors and key differences, at the moment when you're interested in something, it takes a lot to invest. It takes a lot of research to invest in something like that. But most of the time, the first time about Bitcoin, I never knew anything about the chart. I was just buying because mentor told me to buy. And secondly, the first thing that actually even made me interested in it is because somebody sent me money, and then a couple days after, I saw that the value of that money has increased, so I got more into it. So at that point, I wasn't thinking about what the chat are saying or what the news is saying. I was literally just as new as blank as a piece of paper. But like I said, have somebody that have some type of idea or some type of clue. But the difference is he never told me what this was about. He never told me the vision. He never told me a lot of stuff. I didn't have an idea of where to start doing research and all those stuff, right? So I just like, start
Yeah.
doing it on my own, start doing a whole bunch of research, and then I later on catch up. But it's definitely far from what we're talking about right now. We'll probably like have some classes about that towards the end of these sessions, like not today, but maybe when we've gained a little bit of knowledge and you are at that level where you can start concentrating on buying stuff or concentrating on like some fundamental factors. We'll discuss that, but right now I don't think it's the time for it. I don't know if that answer your question, but that's a little bit explanation that I have for you right now.
All right. Thank you.
Yes. Please, I said somebody should help us differentiate between a support and a resistance area because we've talked about that. And this, I'm just wanting us to touch on some key points just so that we are on the same page for everybody. All right, so seem like Flavin is the only person with their hands up. Flavin, unmute yourself and give us some more unmute yourself and give us some more detailed explanation. I don't know if some of these people are trying to raise their hands or okay, maybe Andy, I don't know if you're trying to raise your hand. Simon, I don't know if you're trying to raise your hand. Just type on
Yeah, yeah.
the comment section if you're trying to raise your hand. But yeah, go ahead, Fleming.
Okay. For support, I think the area of support, like for what we have on the whiteboard, from this area where we have the highest wick,
Mm-hmm.
this will
Let's
be
join
our
you.
support area.
Okay.
Oh, it's a straight line from the highest wick. Difficult to draw. You take a
Yeah, just
horizontal
use this.
line from the highest wick.
Come on, go ahead. Sorry about the interruption.
Sorry for my line. A horizontal line like this from the highest wick, and then this is our support. No, this is our resistance,
Okay.
and then the for the lower wick, the lowest wick, we draw another our support.
Okay.
So the resistance now is that line where prices when prices reaches that line, it bounces back. Meanwhile, for the the resistance is that one which when prices come down to that level, it pushes back up. That's what I
Okay,
can say.
Fleming, you're definitely not far from the truth, right? Definitely not far from the truth. Sorry about that. Don't know who is trying to FaceTime me. Hold on, guys. Can you guys see my screen at all? Can you guys see my screen?
Yes.
Can
The
you
white
bring
screen.
some two candles from your screen and show it will be more elaborated than this picture?
Yeah, so something happened to my computer and it was a little bit built out, but okay, so you guys were not able to see my screen, right? All right, so yes, we'll head to the chat, Joseph, but I just again, like I said, I just want us to do some revision and see if we like know what we've been doing at least. All right, and we'll head to the chat, I promise you guys. Who was that? Flavin has some explanation for us. And let's actually give some people are here that were trying to raise their hand up, but they couldn't do it the right way. So, Andy, unmute yourself and give us what you've been catching from the classes.
Yeah, good afternoon, everyone.
Yeah, good afternoon, Andy.
Yeah, according to me, what I understand by support and resistance is that I can say it could be a horizontal or vertical line, or a slanted line, whereby looking at the candles, when if you or the top wicks, like we have from moving from left to right, you have like at least 2 or more touches at the top wick. Yeah, that's for resistance. But as for support, if you draw a line from left to right across the chart, you are going to have 2 or more touches. Yeah. So I think that's how you can identify support and resistance. Yeah. For on the horizontal